Hey, hello everyone. My name is Raj and welcome back to 30CAGR YouTube channel. Friends, in this video, we are going to discuss about a very important topic and I think it's very much necessary as well. We have been hearing a lot about these zero DTE options, right? And these days, there are a lot of spikes, sudden spikes happening in the market. And just to say, these are like brutal spikes, not even spikes that probably some of us can handle, right? So because there's a lot happening in the market, people have been asking me time and again what to do, how to deal with this, and is this the death of zero DTE options? So I thought I'll make a video just to give you some tips on how to deal with these spikes in zero DTE options, right? Before we look at those things, in case if you haven't subscribed to this channel, please do subscribe, because you get to hear a lot of algo tools, strategies, indicators, and other interesting stuff about stock market. Okay, so with that, let's start our video. Before that, first let's probably check my positions. Okay, so this is my position today. I had like maybe around 4,000 rupees loss, but what I really wanted to show you is my PNL of last few days. All right, so if you look at the PNL for the last few days, in fact even I suffered. Okay, so it's not that you are suffering because you do not know how to do algo trading or how to trade in TBS, or maybe you have a wrong strategy. No, that's not the case. You can see that even yesterday I have a loss of around 46,900. Okay, it's like almost 47,000. And I'll scroll down a little bit. You can see that on April 8th, I even had 51,000. Okay, after 21,000. And then of course there was a slight recovery, 28,000, 21,000, 8,000. And then later again yesterday I had like 46,000 rupees loss, right? And today it's not actually 7-8. You can see here that the realized loss is only 3,800. I don't know why these verified P&L software show even the unrealized losses as well. Even in Sensible we see that. I am just carrying some positional trades, so this 4,000 rupees loss is because of that, but otherwise it's just 3,800. So the point here is, but net to net I'm still in profit. Okay, if you look at last 1 month or 30 days, I'm still in profit. So the point is, you need to know how to deal with these spikes to some extent, right? Beyond that, we can't handle really these spikes, and we can't do anything, but to some extent I think you can do a bit on your part, and you can escape. If you actually look at my yesterday's result, 47,000 is actually pretty fine, because I saw so many people lost 3%, 3.5%, 5% yesterday itself. If you are on Twitter or any other social media, then you probably would have seen that, but I just lost like around 1%. So today I'm going to tell you what are those two things that you need to follow to ensure that you handle these spikes to some extent. All right. For that, let me have a whiteboard. I'm going to divide this into two things. The first is about the stop losses. Okay, this is really key. If you know how to deal with stop losses, I think most of your problem would be resolved, right? And then the second one is position sizing. Right, this comes under risk management. You also need to know when you need to shift gears, and in case if you are having like drawdowns and these spikes probably travel together. If you have a lot of spikes, your drawdowns obviously would go higher, right? So you need to know when you need to change your positions as well. All right, so these are the two things that we are going to discuss in this video. First is the stop loss. This stop loss, I'm dividing it into three parts. Okay, 1, 2, and 3. Three important points that we need to discuss. All right, first, never have your stop loss in your mind. Okay, I know a few people have this. They generally think that if we put it in terminal, then there might be some free trades, so that will trigger the stop loss and then come back. Guys, please understand that those days are gone. Now we have a bigger problem. Okay, these are not the days where you keep stop loss in your mind and you think that once the stop loss achieves, then I will immediately place the order. No, within like 10 seconds you see that markets are falling heavily these days because of whatever be the reason. Okay, in some cases it could be just the spike in the option, and sometimes it is spike directly in the underlying. All the strikes are falling, or probably going up in like seconds. So please understand that you need to have the stop loss in trading terminal. All right. Do not have the stop loss in your mind, whether you are an algo trader or you are a discretionary trader, it doesn't matter. Either have the hedging or have, stop loss in your terminal, right? This is the first and the foremost point, which is very, very, very important, right? And then the second is, we have a lot of issues with order cancellations these days. There is something called limit price protection. Both the exchanges have this in place. So the most important thing is, what is the difference that you are putting between trigger price and limit price, right? When you place a stop loss, obviously your broker would ask for both. What is limit price, what is the trigger price, and what's the difference between these two? This difference is now playing a key role on how much you should have, because if you have too much, okay, too much of difference, then the order gets rejected. Okay, there are different rules. Let's not get into the rules. I already had made a video on that. Go and watch that out. But what the LPP says is, if you have too much difference, like more than 40%, then at times it gets rejected, even below 40% also. Okay, if the range is wider, okay, then there is a high chance that your stop loss gets rejected at the time of stop loss execution. Remember guys, they do not cancel the stop loss immediately when you place it, okay, but when the stop loss is hit, at that time they will cancel the stop loss. It's a very, very big problem. And at the same time, if you put small range, okay, let's say you are putting like, I don't know, 40 points, and then they are rejecting it. Okay, if you put 5 points, then what will happen is, market will travel like this, and then if it skips like this, then your stop loss order will go to pending and your positions will still be open. So you cannot have small stop loss, you cannot have a very big stop loss, because that gets rejected by the exchange, right? There is no right or wrong answer. If you ask me, Raj, what is the correct value, it should not get cancelled or rejected, there is no answer, because LPP works dynamically. They take the price of last 30 seconds, and then based on a calculation they do that. So nobody knows what is the best percentage, or what's the best difference between trigger price and limit price, right? But generally what I suggest you is, don't go till 40%. At the same time, don't put like 5%, 6%. Maybe put something around like maybe 20%, 25%, something like that, so that probably the chances of your stop loss getting triggered, okay, and getting executed successfully are more, right? So this is very important. LPP, make sure that you don't put too much or too less. And then the third one is, let's say it got cancelled, okay, because of whatever reason. Even if you put 20% or 25%, still there are chances that it might get cancelled or rejected, right? In those cases, you need to have something called backup SL. Backup stop loss is a must, especially for everybody who is doing algo trading. Okay, in your algo product, you need to ask for this feature, because as I said, days are gone where you can simply rely on your algo tools, or even if it doesn't exit the orders, you can come back and then do the execution. Those days are gone. You need to ask your algo provider to have some kind of backup stop loss mechanism. It could be anything, but the functionality should be like this. If your order, or if your stop loss limit order gets rejected by the exchange, immediately this backup SL should kick in, and then it should square off your position in market. Okay, it's very, very important guys. So the third and the most important thing is, if everything else fails, then the backup SL should come, and it should rescue your positions, right? So these three are very, very important when it comes to the stop loss. And now let's discuss about the second point called position sizing, right? Generally what happens is, as I said, this spikes and drawdowns, they probably travel hand in hand. So let's say you have like a very big spike, and stop loss has got hit. So would you really stop trading? No, right? Because if you have a strategy, if the strategy is not working, that's a different thing. But because we have spikes, you cannot do it, because even if you adopt another strategy, still that one also might have this problem, right? So what's the suggestion here is, let's say I don't know, maybe 10% is what the drawdown is as per the backtesting reports. And what you really need to do is, once 5% drawdown is achieved, then ideally what I suggest is, don't stop the trading. At the same time, don't cut down the positions deeply. Maybe what you can do is you can trade with 75% of your position. Okay, just cut down 25%. Don't cut down 50%, because you also need to remember that it takes phenomenal effort for you to get back your lost money, right? So you cannot straight away cut down your so much of your position. And let's say still drawdowns went deeper and deeper, and now it reached 10%. At this point in time, cut down your position furthermore and now trade with 50% of your capital. Okay, and now don't stop your trading, because see, just because your backtesting report has 10%, it doesn't mean that it follows your future trading as well, right? Backtesting reports are just to give you some idea, right? But it doesn't mean that your trading strategy exactly follows your backtesting report, right? So 10% is achieved, then 50%, and then now let's say it has increased further to 15%. Now cut down another 25% and then make it to 25%. Okay, and if it is like 20% drawdown, maybe that's when you need to rethink about your strategy. Or I don't know, if your risk appetite is more, maybe you can travel a little more with the strategy and then cut it down around 25 or 30%, because drawdowns are inevitable, you cannot stop them, but at what stage you need to stop, that depends on your risk appetite and your strategy as well, because some strategies have high drawdowns but they give high returns as well. Some strategies are less profitable, but the drawdowns are extremely low, like maybe 4% or 5%, right? So it totally depends on your style of trading. So this is the second thing. So tomorrow, if you have spikes and have drawdowns, just try to cut down your position strategically, but don't straight away go from 100% to 25% or 50%, because recovery becomes very difficult for you, right? So these are the two very important things that I follow, and I think you also need to follow them. And in case if you have any questions, put it in the comments, and I will be glad to answer. If you like the video, please like it and share it with your friends and colleagues as well. And don't forget to subscribe to this channel. You get to see a lot of other interesting stock market concepts in this. See you in the next video. Until then, take care. Have a great day.